Picture yourself in July, opening MyGov to lodge your return and just guessing at your deductions to get it over with. If that's you, you're leaving money on the table, and it's not your fault, because nobody actually teaches this. A worker on $75,000 who guesses can miss $800 to $1 in $200 a year in perfectly legal refunds, according to the ATO's 2024 data. Today, I'll walk you through the exact steps to claim the maximum, stay well inside the rules, and lodge with confidence. Let's get into it. Before the steps, let's talk about what's actually at stake for you. If you underclaim, you hand the government money you never owed. For a mid-income worker, that's often $240 or more every year, per the ATO's 2024 figures. But push too hard in the wrong spots and it gets worse. The ATOs can apply penalties of up to 75% of the tax shortfall in serious cases, plus interest. They now data match land titles, bank interest, property statements, and your employer's payroll. So your goal isn't to be timid or aggressive, it's to be accurate and fully documented. And here's the part most people miss. That's exactly how you win on both sides. Step 1. Log into MyGov, open the ATO, and start your 2025 to 2026 return through myTax. Now work through every deduction section methodically: work-related expenses, gifts and donations, interest and dividends, professional memberships. Most people only claim the obvious stuff, maybe $200 total, and stop there. If that's been you, you're in good company. The average employee has stationery, small tools, subscriptions, and union fees they never think to include. The ATO lets you claim up to $300 of work-related expenses without written receipts, as long as you genuinely spent it. Don't leave that behind, but only claim what you actually incurred. Step 2. Before any deduction goes in, run it through the ATO's 3 golden rules. 1. You spent the money yourself and weren't reimbursed. 2. The expense directly relates to earning your income. 3. You have a record to prove it. If all 3 are true, you can claim it with total confidence. Take laundry. You can claim up to $150 for compulsory uniforms or logoed work clothing without receipts, but not your everyday clothes. These rules are genuinely on your side. They tell you exactly what's safe. And here's where it gets interesting, because the next number is one people forget every single year. Here's the headline number people forget. You can claim up to $300 in work-related expenses without keeping written receipts. For someone on a 32.5% marginal rate, claiming the full amount instead of zero puts about $97 back in your pocket. Add the $150 laundry allowance, and that's real money you'd otherwise miss. But I want to be upfront with you. No receipts still means you must have actually spent it and be able to explain how you worked out the figure. It's not a free standard deduction, so don't treat it like one. Step 3, and this is where most refunds are won or lost. If you work from home, the revised fixed rate method lets you claim around 70 cents per hour for 2025 to 2026. 8 hours a week for 48 weeks is 384 hours, about $269 in deductions, or roughly $87 back to you. But here's the honest catch for 2026. The ATO now demands a record of hours worked from home. A diary, a roster, or calendar entries all count. Guessing 10 hours a week with no log is a known trigger for a closer look. So start that log today, not in October when it's too late to reconstruct. Step 4. Car and travel claims are one of the ATO's favorite review targets, especially when your job doesn't obviously require driving or the logbook is missing. If you're claiming, record each trip with the date, purpose, and kilometers. Use cents per kilometer for low usage, or a proper logbook for higher use. If you're an office worker, keep your claims modest. If you're a sales rep, you can justify a lot more. The key is that the number comes from your records, not your memory. Keep everything for 5 years after you lodge, and let me show you how to sanity check the whole thing before you submit. Step 5. Before you hit submit, sanity check your refund. Take your income statement from the ATO pre-fill, your bank interest, and your planned deductions, and run them through a refund calculator like the money.com.au 2026 tax calculator. Then log into myTax and confirm the pre-filled income matches and your deductions line up. If your myTax estimate is wildly higher than the calculator or way above last year with no clear reason like a pay rise, stop and recheck for overclaims. Then lodge before 31st October to avoid late penalties. Now here's what all of this actually looks like for a real person. Let me show you what this looks like in practice, and where you sit will depend on your own spending. Jess, a 34-year-old marketing coordinator on $78,000, used to claim just $200. If you're on the lighter end, you might only find a couple of hundred in genuine extras. Jess sat in the middle. $300 in general work expenses, $150 in uniform laundry, $269 from her work-from-home hours, and $220 in union fees and subscriptions, nearly $939, all real and documented. If you're a heavier work-from-home user with a car claim, it can go higher still. That extra $739 lifted her refund by about $240 with zero extra risk, because every dollar is genuine and recorded. Now, the mistake that catches the most people out. The biggest myth is that the $300 work expense and $150 laundry limits are automatic amounts you can claim whether you spent the money or not. That's not how it works. The ATO allows these without written receipts, but only if you genuinely incurred the costs, can explain how you calculated it, and it relates to earning income. Claiming them as round number freebies with no real spending is non-compliant and draws scrutiny. Same logic with working from home. A $400 guest with no log can be disallowed, costing you about $130 in tax plus penalties. And here's the good news that's coming up next. One more thing you should know, the rules are actually getting friendlier for you. From 1st July 2026, the tax rate on income between $18,101 and $45,000 drops from 16% to 15%, worth up to $268 per taxpayer, according to Treasury's 2024 figures. From 1st July 2027, it falls again to 14%, totaling up to $536, and the new working Australians tax offset adds up to $250 for around 13 million workers, but you only capture these by lodging correctly and on time, so the good habits you build now pay off for years. Let's recap fast so you've got it. 1. Audit your deductions in myTax against every category. 2. Test each claim with the 3 golden rules. You paid it, it earns income, you have a record. 3. Keep a working from home hours log using the 70-cent rate. 4. Document your car and travel with a logbook. 5. Run a safe max estimate and compare it to your myTax figure. 6. Lodge before 31st October. Do those 6 things and you'll claim the maximum you're entitled to while staying completely off the ATO's radar. If you've made it this far, you now know how to claim your full refund the safe way, something plenty of people file their whole lives without ever figuring out. Your one action today, start a simple working from home hours log, because that's the deduction most people lose for lack of records. If you want to go deeper, next I'll show you how to legally boost your super before 30th June and cut your tax bill at the same time. And remember, this is general information only, not tax advice. I'm Sophie, and I'll see you in the next one.